Do you ever find yourself worrying about a market crash? How about inflation? Do you worry about inflation getting out of control? When I help clients with their financial planning, they often express surprise upon discovering that a persistent 3% inflation can have a more significant impact on their retirement plans compared to a 30% drop in their investments 1 year into retirement, even if it takes 4 years for those investments to recover. This analysis highlights the greater risk of running out of money due to the subtle yet powerful impact of sustained inflation, as opposed to the more immediate but recoverable impact of a short-term market downturn. Understanding market crashes and inflation can be a bit like comparing apples and oranges. They're different issues, but they can affect our financial health. Hi, I'm Lynn Williams, and I'm the owner of the Lifestyle Protector, and we're financial planners and wealth managers. And today I'm going to break these down: inflation and market crashes. Inflation is a sneaky money shrinker. Think about the past 20 years as a quiet sea with gentle waves and low inflation. Prices rose, but slowly and predictably. We got used to these calm seas. But fast forward to today, and it's like a storm has hit us: higher inflation. Suddenly, that $100 in our pocket is losing value much faster than it used to. And this shock is significant because it's a stark contrast to the gentle inflation wave we've experienced over the last couple of decades. The ripple effect affects everything, and it just doesn't hit our shopping cart. Think about businesses. They've had to pay more for materials and wages, so they increase their prices. Also, inflation has influenced interest rates. To control high inflation, Canada's central bank has raised interest rates at a record pace. This means higher costs for borrowing, affecting everything from mortgages to business loans. For 20 years, we made decisions in a world where inflation wasn't a big worry. Now the game has changed with higher inflation, and we're all having to adapt to these new rules. Now let's talk about market crashes. Crashes or corrections are like sudden storms in the financial world. Dramatic, yes, and scary, yes, but focusing only on the fear of market crash can distract you from the slow, steady burn of inflation. A market crash, while severe, is an event that people in the financial world have experienced and studied for decades. And there are strategies in place to deal with them. And they are, in a sense, a known quantity. There are three things that you can consider when comparing market crashes and inflation. The first one is time. Market crashes is like comparing the short-term to long-term inflation impacts. Market crashes are often short-term events. They can be severe, like a roller coaster dropping suddenly, causing panic. But historically, markets have recovered over time. If you're a long-term investor, like most of us are, when it comes to our retirement, we are used to riding out these dips. However, inflation is more like a slow-moving tide, constantly eroding the value of our money. It's less dramatic than a market crash, but over the long term, it can be way more damaging. Secondly, think about visibility and attention. Market crashes make headlines. They're sudden, dramatic, and everyone talks about them. And this visibility can make us focus on them more than the gradual, less noticeable impact of inflation. But just because something is less dramatic doesn't mean it's less important. Inflation's seemingly invisible presence and slow pace can lull us into a false sense of security, ignoring its long-term effects on our financial well-being. And for many, high inflation is a new, unfamiliar challenge. It's like if you've only ever driven a car in clear weather and suddenly you have to navigate a car in a heavy storm. This lack of experience with high inflation can make it more challenging for all of us, potentially leading to a more significant long-term impacts than a market crash. Market crash, yes, can be intense, but it's more familiar territory. Both types of events are important and often surprising, but inflation's subtle, widespread effects can be more impactful over time. Finally, it's crucial to remember that every individual situation is unique. Whether it's navigating through today's high inflation after decades of stability or preparing for potential market fluctuations, the best course of action can vary greatly from person to person, depending on your situation in life as well as your risk profile. Therefore, seeking personal advice for your personal situation from a qualified professional, like a certified financial planner, is always a wise step. Also, you can visit our website and sign up for our newsletter. The details are below, and I'm told our newsletter is a pretty good read. We're passionate about helping professionals, people like you, get clear, gain confidence, and create financial prosperity, regardless of the weather.